Consumer inflation edged up slightly in December, but remains contained below the midpoint of the Reserve Bank's inflation target range. Data from SABC shows annual consumer inflation was 3% in December, up from 2.9% in November. That's on a year-on-year basis. Average inflation for the year 2024 was 4.4%. That was down from the average of 6% in 2023. The main contributors to the 3% annual inflation rate were housing and utilities, miscellaneous goods and services, as well as food and non-alcoholic beverages. Food and non-alcoholic beverages inflation went up slightly to 2.5% in December from 2.3% recorded in November. The largest price increases were recorded for sugar and sweets, fruits and fish. Hot beverages prices inflation also remains elevated. At the lower end of the target bracket, inflation remains contained, keeping hopes of further interest rate cuts when the Reserve Bank makes its decision at the end of this month. SABC says it will update the CPI basket of goods and services and respective weights in the January CPI release, which will be published in February.
Inflation for food and non-alcoholic beverages ticked up to 2.5% from 2.3% in November. Annual price increases for bread and cereal products were steady at 3.7%, although prices dropped by 0.2% between November and December. A number of wheat-based products showed monthly declines, including brown bread, down 0.6%, macaroni, 0.7% lower, instant noodles with a negative 2.2%, and cake flour with a 1.1% decrease. Meat products are 0.4% lower than December 2023, a reading that is lower than November's negative 0.1%. This is the lowest annual change for meat since May 2019, when it was negative 0.9%. Despite annual deflation, meat prices increased month on month by 0.5%. IQF chicken portions, which is the highest weighted meat item in the basket, increased by 2.2% month on month.
Well, to give us his take on the latest consumer price data, I'm joined by Dr. Christie Viljoen. He's Senior Economist at PwC. Thanks very much, Doc, for joining us. So was this latest print pretty much in line with expectations, and what's your take on it?
Yes, at the bottom end of the central bank target range, 3% was definitely close to expectations. We've had quite a few months now of inflation at a very, very low level, to be honest, and great news for South African consumers and a great way to start 2025, I guess, with this type of data. So overall, I think we're quite happy with this number.
What about the fuel price? How much of a factor was that in the latest data?
Well, it's a combination of a negative and a positive. So we know that fuel prices are increased November and December, but they are still much cheaper than a year ago. So about 10% cheaper compared to a year ago. So depending on what number you look at, but overall, I'd say fuel prices have contributed significantly to the overall inflation rate coming down towards this sort of a 3% level. Actually, a lot of imported goods have become cheaper because of how strong the rand has actually been, especially sort of the third quarter of last year and October, November as well. So fuel, along with quite a few other imports, have been helping us with this low inflation number.
It does seem that there was an expectation that food prices would rise a bit. Any concerns about the trajectory of food prices?
Yes, so as the man from SABC said, the food price is looking good at this stage, but there is concern. The Reserve Bank said in November, when it looked at inflation and its forecasts, there is concern with food prices. We've got several areas of drought in the country. There are certain places where we are seeing struggles at the farm sector. We know that maize prices, for example, are about 50% higher right now than they were a year ago. And those are the things that will start filtering into retail prices. So the farm gate price for maize is about 17% higher than a year ago, but at a retail level, it's only about 3 or 4%. And that means in the next few months, this overall inflation number of about 3% will start climbing again. We probably won't be able to keep it at this low level because food prices specifically will be an element to look at.
Yeah, we know that there are lots of variables that drive inflation, but right now there's a lot of speculation internationally around the new administration in the United States policies that could be inflationary. How much of that do you factor into your forecast right now, or it's really an unknown quantity, you just have to wait and see?
It is unknown to an extent, but the risk is to the upside. In other words, it's pressuring inflation upwards. The threat from the new president, or the promise from the new president in the White House, is that he wants to put up import tariffs for Canadian products, Mexican products, and a few others coming into the U.S. Now, that means that whatever is produced in the U.S. would need to incorporate those increased costs. And very often, many other countries around the world follow U.S. prices as a benchmark. So if suddenly a product, let's say a chemical product, gets more expensive in the U.S., other countries would do the same. So for us, the U.S. political situation, there is quite a few unknowns. But at this point, if we think of which way is it going to impact global inflation, and to a smaller extent South Africa's inflation, it is certainly towards the upside and not to the downside.
Yeah. When all is said and done, of course, all we want to get from you is what do you expect to arise from the interest rate decision come January the 30th? Do you think this is the only opportunity, actually, that the Reserve Bank may have to give us another cut, given all the uncertainty?
Well, I think most economists agree that we're going to see another cut this month, and some of us are holding out for March as well. If we look at the forecast that the Reserve Bank brought out in November at its previous meeting, the way that they look at where inflation is going, where the economy is going, we think it's going to be another cut, small cut in January, another one in March, but that's probably going to be the end of it. We will see by the end of this month what the Reserve Bank's updated forecasts are. They will look specifically at, for example, where is the exchange rate, because it is now weaker than it was in November. They will reevaluate their forecast for the oil price, for example, and they will think about how South Africa's economy will perform if we do indeed see a weaker U.S. economy or a stronger U.S. economy. So apart from the general view that we'll see a few more rate cuts, I think we're very much anticipating a good update from the Reserve Bank when they meet end of this month for us to sort of reevaluate where we are with many of these assumptions.
All right. Thank you so much. That was Dr. Christie Viljoen. He's the senior economist at PwC.